HOA charging everyone $8,000 for new roofs. Roofs are only 8 years old.
I live in a community in Colorado run by an HOA. The HOA owns and insures the outside of the homes and the owners own and insure the inside. In 2012 the roofs were replaced due to hail damage. At the time the HOA paid extra for improved shingles with a longer life. This past June there was a hailstorm that caused damage again. The roofs were inspected by one selected roofing company along with one insurance agent, and the insurance deemed the roofs a total loss. The HOA insurance company deductible is 2% of the total value of the property, which is now $20 million. 4 years ago, the total value was almost half what it is now, $10 million. The estimated cost of new roofs is approx $1 million for all 63 homes. The HOA sent out letters last year and this spring reminding people to get a HO6 special loss assessment on their personal homeowner's insurance.
Some people did get this added, but were unaware that it did not cover hail damage and will have to pay their fraction of the HOA insurance deductible out of pocket, just under $9,000. Understandably, there was a huge uproar over the cost of the deductible. The HOA responded by saying they could contact the bank to finance the deductible that the HOA has to pay, but it will increase everyone's HOA dues by almost $170 per mo for the next 5 years, which of course is unacceptable since a lot of people do have the appropriate coverage from their personal insurance to pay. Here is where it gets really messy. The HOA insurance company is going after the previous roofing company for reimbursement because they say they didn't use the shingle they said they would and didn't do some other things the right way.
I don't have much info on this particular piece of the puzzle. However, it seems odd that the HOA insurance company should be getting dollar from the previous roofer. Shouldn't that dollar go to the homeowners? What else can be done here? It seems like the HOA insurance company is really screwing us over with an almost $9,000 deductible, which is double what it would have been 4 years ago. The roofing company appears to be charging around $16K/home for new roofs, which seems high, and if we are paying almost $9K then we are paying more than half of the cost for the new roof, and I don't understand why the HOA had this awful policy to begin with. Edited. Although we knew they were assessing the roofs for damage in June, we were only made aware that they would need to replace the roofs and we would need to pay that deductible in October, just a few weeks prior to them starting work on the roofs. They are rushing the repairs so that it can be done before winter due to concerns of the snow sitting on the roof and causing leaks and the insurance not covering that damage due to the fact that it was caused by hail damage that was identified and not rectified.
NAL just passing through. 2% of 20 mil is 400,000. Divided among the houses that's around $6,400. Where are they getting the 9K from? Does your HOA not have a surplus or emergency fund to pull from? Seeing as this happened before, it seems like something they would proactively plan for rather than scrambling at the last minute. NAL. Are there any ties between the administrators of the HOA and the new roofing contractor? Does your HOA contract spell out how HOA funds are to be used, how much discretion the board has? Go to an HOA meeting and find out why the deductible is $9,000 per home and not $6,350. 20 million value, 0.02. 63 homes. I'd be glad someone was trying to go after that roofer. But 8 years later, might be very hard to prove a case. NAL. And rushing the repairs is sensible. Leaky roofs can cause much more damage and would get much more expensive for all homeowners very, very fast. I would look into the higher deductible maybe being contributed to the members of the HOA, not having to pay for their own houses. Plus $16K per house at a 2% deductible is only $3,200 per home, making the requested payment 3 times the amount needed. It seems like they have a higher deductible than previously stated, probably because they are not being forthcoming of how much they pay for insurance. The higher the due stable, the less they pay as a premium. Or it is a shady roofer that is connected to a member HOA. I am a lawyer who has extensive HOA litigation experience. Trying to fight this will be overwhelmingly expensive and you will lose anyway because the HOAs and home builders already lobbied your legislature to have the rules written in their favor. Plus, most, if not all, of the good HOA litigators are being bankrolled by the HOAs, so whoever you hire won't have a chance. Sell your house and move somewhere that doesn't have an HOA. Check your own condo insurance. Mine has a line item called loss assessments that is specifically designed to cover this sort of thing. NAL. However, it seems odd that the HOA insurance company should be getting $1 from the previous roofer. Shouldn't the $1 go to the homeowners? This is not odd. This is typical. Imagine you are in a car accident and fault is not yours, but the party at fault challenges your claim. Until the claim is settled, you must use your own insurance to cover the costs of repairs and/or replacement vehicle. You have to pay the deductible. In the meantime, your insurance company does all of the legal heavy lifting to go after the other party. They will eventually settle, and if the settlement covers everything, then you get your deductible back. The same thing is happening here, but it is probably quite a bit more complicated. You probably won't get all of your deductible back. On the plus side, if the roofer's insurance pays out, the calculations for your premiums probably won't be affected, and you get to reset the life of your roof for relatively cheap. Hopefully your board will learn an expensive lesson on the value of construction consultants too. Check the work before final payment on large jobs. The roofing company appears to be charging around $16,000 per home for new roofs, which seems high. On a $1 million job, your board should obtain a roofing consultant who gets at least 3 bids using comparable materials and installation procedures.
If this bid is in line with the others, then that is a clear indication that is within the normal price for this work.
If nothing else, force the HOA to do their due diligence and get a number of estimates. Just redid my roof. Estimates for $6,300, $6,800, $9,000 and $17,000. I would have to think a roofer would discount to get an order for 63 roofs, as they are usually paying a sales force for individual sales. Too often HOAs go WA friend as they want to be sure they are good, but it isn't their money. How big are these homes? That deductible price seems higher than the cost of the shingle replacement itself should be, unless we are talking some kind of special roof, some kind of extreme damage or incredibly large homes. Not a lawyer, but have extensive construction management experience across several states. Just an FYI, I wanted to point out that when contracted and installed properly, it's pretty much industry standard in the US to receive a 20-year warranty for flat-type roofs from the manufacturer via the approved roofing contractor, and standard for a 30-year warranty for shingle-type roofs from the manufacturer via the approved roofing contractor. For any contract that costs from 6 figures and 7 figures, it's also pretty standard for an experienced owner's team to invite an authorized representative from the manufacturer out to the site to inspect and confirm their product was installed correctly, to confirm they will warranty the roof, and prior to final payment of the completed work to the roofer. If this was not the case, then you have unexperienced property management and/or an unexperienced board running the show, and they should not be entering into any formal construction agreements without the expertise of proper consultants along with an attorney who specialized in design and construction law. What is the value basis for the deductible insured value, which should be equal to the replacement value? How much will it cost to rebuild the entire structure from scratch if it is totally destroyed, or market value. The market value of the properties can skyrocket. 10 MLN equals 20 MLN in 5 years is understandable. Basically because location, land value. But the replacement value of the structure itself should not have gone up twice in this time frame. Neither materials nor labor costs should have gone up twice in this time period. I'd organize with your neighbors and get a professional appraisal to review the actual current replacement cost for the complex. Is it really $20 MLN? If your community is overinsured, basically if it costs $8 MLN to rebuild everything from the ground up, but you were insured for $20 MLN, then you are being screwed twice. By paying unnecessarily higher premiums by having an unnecessarily high 2% deductible. Someone in the HOA management might be in cahoots with the insurance agency and got kickbacks. If that's the case, there may be legal grounds to retroactively review of an invalid policy and have its terms changed retroactively to a realistic replacement value. If the policy is basing a deductible of the market price of the policy, not a replacement value, it's very surprising and questionable. Why is it the case? And how do they determine the current market value? Couple more questions. Are these single-family homes? It's unclear why HOA owns the outside of the homes then unless it's a multi-unit housing. Seems very unusual. What's the square footage of the homes? $16,000 is quite high for a roofing job, especially at this scale. That being said, unless you can get it lower than the deductible, unlikely. It kind of doesn't matter to your pockets. I wonder how would this HOA policy apply if only one home had extensive damage? Let's say totally destroyed in fire. Would that be a 2% deductible of that home value? Or would that still be 2% of the entire community's value? In the latter case, it means that the policy was basically useless on any one home event, and nearly useless in case of a massive hailstorm. Deductible cost versus roof replacement costs, especially if a more reasonable quote is found. Flooding may be excluded too if you're not in a FEMA flood zone. What remains to be covered? Only tornadoes and earthquakes. Quick reality check. I'm in a townhome in a hot location. DC Metro, NVA. 2 stories 1650 SQFT. Roofing area 850 SQFT. With a market value of $550,000. Its insurable replacement value is $350K. 2% of that would be a $7,000 deductible. That's insane. Re-roofing was quoted for $8,000 minus $10,000. So, 2.5% to 3% of an estimated replacement value of the building. The HOA can sue the previous company for defective construction or breach of contract. If they are successful, the HOA can credit that money towards homeowners' accounts. But that is rare. Usually they would put it into the reserves. And in effect it would reduce the need for future dues and special assessments. It could also take a lot of time. It might not be successful. Even improved shingles can be damaged by hail. And depending on the specifics, it might not be worth pursuing. Like if the company has gone bankrupt. Waiting to make the repairs until after this is resolved could mean the HOA is liable for the interior damages. But also, the HOA can put down tarps or make temporary repairs until the roof is replaced. For a large building with a history of previous claims, a policy with a lower deductible could have very expensive premiums. Policies with relatively large deductibles are common just in general. Most people don't expect to make a large claim, and it allows the HOA to keep dues low. And as you noted, in the event a claim is made, the unit owners are advised to have loss assessment coverage. Typically, loss assessment coverage would cover a special assessment due to hail damage. If the special assessment is spread out over 5 years, and the HOA gets a loan, it is still covered. If the HOA just raises the dues, it is not covered. The math doesn't work out on that deductible. Cost of the assessment, number of units. But then the special assessment amount can be for more than just the deductible. Is this covering other repair-related costs? Or financing costs? What else can be done here? As a homeowner, you can attend the meetings and ask for more info. The HOA could form a committee to get bids for the roof replacement. Get inspections to make sure a replacement is needed and a repair is not an option. And look into financing options instead of just the HOA board or the management company handling that. You can ask the HOA board to take a poll or vote of the homeowners on how to handle this. Replacing the roof, right? But generally the HOA can pass a special assessment and/or take out a loan for emergency maintenance without a vote of the homeowners. If some of the HOA board members are not being involved in doing what they need to, they may be willing to step down if someone else volunteers. If the HOA is not acting in the best interests of the HOA, the homeowners can recall the board, and a new board could reverse a special assessment. NAL, but I am a licensed insurance agent in Colorado. But I'm not your insurance agent. Definitely double check on the loss assessment exclusion. Any policy worth having here is not going to have an exclusion, although the wind and hail deductible may be higher. If your contact really lists that exclusion, get a better insurance carrier. Insuring in HOA isn't a cheap prospect, and they likely have super high deductibles. On top of the market for that is shit at the current moment. I'm not entirely sure what the issue is and what you're being assessed for. Are you being assessed to pay just the deductible? I feel like usually that is exactly what loss assessment is for. However, some companies have general LA and some have master policy deductible coverage. We ran into the latter a couple years ago with one particular company and had to get it rectified, because neither we nor the underwriter knew that the master policy deductible coverage was a thing, and we'd only ever raised LA for them. I had to look to see that you weren't my HOA. I'm in Minnesota and our HOA just did similar. We were going to have roofs replaced in another 2 to 3 years. All of a sudden they said that due to a hailstorm that happened in July, the insurance companies were replacing roofs now, and we needed to have our insurance's loss assessment coverage cover $10,000 of the cost, and they were starting in a week and payment was needed in 2 weeks. The total cost per run, twin homes, was about $28,000. Each homeowner was responsible for $10,000 and the association would pick up $3.5,000 per unit and insurance would cover the rest. The board said they contacted several roofing companies and only one called back. Trouble is there aren't a lot of companies that can do multiple buildings in a 56-unit association at one time. I think all had loss assessment coverage, but not all of that is the same. Mine charged a deductible and quite a few others didn't. Also, one person had just moved in and they were charging her the $10,000 for something that supposedly happened when she didn't own the unit. Associations suck, some more than others. But in all, you have to be willing to give up your say on parts of your property to the association. I'd move if I could afford to.
If you enjoyed this video, please check out our playlists full of similar content. Epic Aircast is like doom scrolling for your ears. Please like, share, and subscribe.